So the bottom line is this. The market has various templates and programs. This is the reason why your strategies or setups may not work all the time. In fact, they have limited times when they work. You trade a setup today and the next time it works is in the next 1 week or 2 weeks from that time. And this is the reason why, because the market has templates. It would take probably another 20 days or 15 days before it gets to that point where your strategy works again, or before it gets to that point where the market gives a perfect setup that agrees with your strategy. So this is the reason why strategies and setups don't always work. Now, if you're watching this video, then I take it that you have watched the previous video that I did on order blocks. Because if you haven't, I suggest that you go watch that now. It's really short, so you can have an understanding of what I'm about to talk about, because that contains the background to what I intend to talk about today. So if you've been trading for a while, then you probably have a strategy or a setup that you look for in order to be a buyer or a seller. It could be double tops, double bottoms, demand and supply zones, whatever it is, you just name it. Okay. Now it could be this, it could be this pattern, it could be this other pattern, it could even be this pattern. I don't have words to name them. You know what you call them. You have whatever name it is you call them. But the point is, you don't want to trade based on those setups. You don't want your trading to be based off setups or trading strategies. And I'm going to tell you why in a moment. And this is really going to be one of those very short videos where I go straight to the point and not really waste your time at all. So basically, I'm telling you that you don't want to trade based on setups or strategies. Now, the thing is, you probably have the hours and big figures template if you're watching this video, and you have added that to what would be your traditional setup. Maybe to refine the setup a little bit, or to add some form of confluence that you need. Of course, if you have confluences, that's fine. But what if I told you that there are templates that determine what should happen or what setups become most high probability? What I call this is the superior context. The superior context is that context that the market achieves or intends to achieve over a period of time. So basically what I'm always saying, or what I'm trying to say, is that the market has templates or programs. So you want to consider every candle as a template or a program. So if you are looking at the daily chart, or you're intending to trade within the daily chart, or you are intending to trade as an intraday operator, then you want to pay attention to the daily chart, because every candle is a template. I may not be able to go into all the details here, but I will hint onto something. So the basic thing that I'm trying to come to terms with here in this video is the fact that the market has templates. So there is a template for week 1, week 2, week 3, week 4, and week 5. So every other confluence that you're looking for doesn't even matter. What matters is the template that the price is looking to fulfill. And these templates are in line with a calendar, an annual year-long calendar. And it has to complete that. And it uses algorithmic behavior to complete that particular calendar in 1 year. So basically, for every day that you intend to go into the market to be a buyer or a seller, the most important thing, and here is the superior context. The superior context isn't just the trend. The trend is very important, but the superior context that I intend to drive at is the template that the market intends to cover for that day. So let's look at it this way. If you have 4 boxes, box A, B, C, and D, and each of these boxes have fruits in them. Box A has an apple, box B has a cherry, box C has a lemon, and box D has a pineapple or a grape. Now, when you open box A, you will always find an apple. You already know all these boxes and what they contain. That's the same way the market prices, or the market is poised to deliver. So the market is poised to deliver in such a way that you can actually determine or tell what is in that box for that day based on what the market has done in the past, maybe 20 days or 50 days, but based on what the market has done at the start of the week. And you can tell what that day should be. So if you are looking at a bullish marketplace like this, you could be a seller. You could be a buyer in a bullish marketplace, and you could also be a seller. So what I'm talking about is the fact that the market has a template. And so if I come into a day and I'm looking at the template for that day, I could tell if the market is giving me a bullish or a bearish template in an already bullish marketplace or an already bearish marketplace. Now let's look at this example. Now this is the pound dollar on the 4-hour time frame. Now we're going to break this down to the start of the week. Now the start of the week, let's go to look right here. You would find that we have an order block, a bearish order block. And that would be an area where, of course, you're going to be looking, of course, anyone would be looking for a reversal. But let's come to the 1-hour time frame and look at this from an intraday perspective. Now, this candle would be that bearish reference point that I'd be looking to be a seller, or anyone would be looking to be a seller. I wouldn't. But let's say I come into that week and I understand that the market would trade SIG highs for that week. What do you think happens when I'm looking to be a buyer on this day, Wednesday, right here? What do you think happens when I'm looking to be a buyer on Wednesday? There would be some form of conflict as a result of this order block right there. I would be in a state of conflict. And yes, of course, price did trade into that and reacted. But guess what? It was just so that it could trade higher. But anyone who looks at this would immediately think that, well, there is a conflict. I want to go long, but I'm concerned about this zone. I'm concerned about this reference point. So what if you had a rule-based system that, when applied, stands above all reference points, and you wouldn't really put so much importance to this, and so you would have gotten into this trade and you'd have taken the move all the way up, and you would have even been a buyer on Thursday. Only until Friday did we see a move to the downside. We haven't even started applying hours in big figures. Now I'm going to go ahead and bring in the big figures template right here. Now here you can see the big figures. And where does that price react from? 50-minute figure, order block, just right at the 50-minute figure. I didn't bring this in from the very beginning. Everything isn't based off order blocks and mid figures. The highest degree you could get to is when you understand what the program is for that day, without having to even look at order blocks and don't even give a hoot about order blocks or reference points. You only care for what the algorithmic behavior would say for that day. And what does that mean? It means you would only be looking for bullish order blocks then that line up with a certain price level, that line up with a certain time of the day. But that superior context is above every other thing. And that particular context is what you need. It's not the trend. Even though the trend is also a part of it, it is not the trend. It is a program. Just like I told you about the boxes that we have, A, B, C, D, E, F, G. Consider those boxes. Now switch those boxes. Box A takes the day Monday. Box B takes the day Tuesday. Box C takes the day Wednesday, and all the way till Thursday. Now you would begin to have an understanding. It doesn't explain everything, but now you begin to have an understanding. So it means that box A will always have apples, box B will always have cherries. And if these boxes get switched in such a way that C comes before D, and we end the week, or we end the month, or we end the hour, it means that on the next cycle, we have to start with The algorithm will always do this and make sure it completes its cycle before continuing. This is where I'm going to end this for today. I do not wish to go any further with this. It gets a whole lot more precise. And if you want more information about this, you can actually join the free Telegram channel, or you could join the private group if you so desire. And you will be open to more ideas that I'm talking about. And it will be a lot more clearer. It is something that I consider to be so valuable. I may not have the freedom and the liberty to talk about it here, but I'm passionate about giving you an idea on what you can look out for. Go take what I've talked about today and study them, and maybe you would come out with something at the end of the day. Now, that being said, I'm going to see you in the next one. Until then, stay profitable, guys.